Welcome everyone to this session, which, just to make sure you're in the right room, this is the session on breaking donor dependency in digital agriculture by unlocking viable and inclusive business models. I'm Josh Woodard. I'm the Senior Digital Advisor with USAID's Bureau for Resilience and Food Security. And today our plans are to have really a discussion. I'll introduce each of the other panelists in a moment, but we're seeking to unpack and explore some promising models of financial and technical support that are potentially well suited to encouraging the development of viable and inclusive business models, and also to support the digital ag ecosystem more broadly. And so we'll be looking within that, what are some of the ways where donors and donor supported projects can have a catalytic effect, and what are some of the ways that maybe are less helpful? As this is meant to be a discussion, we'd encourage everyone who's attending to join in the chat. Please do, if you want to share ideas, share that in the chat. If you have questions for us, please share those in the Q&A. And preference is to use the chat within Whova as opposed to the Zoom chat, but we'll be monitoring both, so we'll be able to keep track of what you're saying on both. So let me introduce you quickly to who we have joining us today, and then I'll share a few overall remarks and perspectives, and then we're just going to jump into the discussion. So first, I'm pleased to introduce Rima Subramanian, who's the co-founder and managing partner of Anchor Capital Fund. Anchor is an early stage investor in India that has around a dozen portfolio companies in the ag tech sector. We also have Sieka Gadabaki, who's the interim program director at ICTforAg. For those of you who don't know Agrifin, it's a program that's now in its 10th year, and it facilitates ecosystem actors, helping them to scale digital ag services across a number of countries globally. Also, we have Abby Taylor, who's the innovation manager at LRES Humanitarian Innovation Fund, which is a fund that launched in 2011 as an independent grant-making program for the humanitarian community. So while they're not focused on ag tech specifically, I think that Abby, from her perspective on the humanitarian side, has some interesting perspective to offer that we can learn from in the digital ag space. And then finally, I will introduce Tamara El-Raghi, who's the founding managing director of the Acumen Resilient Agriculture Fund, which is a $58 million impact fund and the world's first equity fund designed to build the climate resilience of smallholder farmers. So with that, just a few remarks to set the scene a bit. I think that increasingly those of us who work in this space are really realizing the importance of business models that are not only viable, but that are also inclusive. We heard, for those of you who joined the keynote with Max a moment ago from GSMA, you heard, he shared a lot of data in terms of some of the gaps that still exist, whether it comes to access to smartphones or access to mobile network coverage writ large. So, these are things that we really need to be thinking about more, and they're very much intertwined with how within USAID and within the Bureau where I sit, Bureau for Resilience and Food Security, what our priorities are. So we have a digital strategy action plan for the RFS Bureau, which was released a few months ago. Some of you may have seen ICTworks just covered it today and shared some details about it. And it's also, these issues are aligned with the USAID administrator's priorities, particularly in terms of inclusive development and localization. So I know from my experience working in this sector for 15 plus years now, I've come across a lot of instances where best intentions have ended up poorly. And so, I recall I've spoken to numerous entrepreneurs who have shared with me how, they've almost fallen into this trap of allowing their business model to become overly dependent on donor funded projects, which oftentimes, may offer a significant early infusion of revenue or cash flow, but ultimately left them unprepared for how to sort of continue or perpetuate when that revenue stream dried up. And I've also had conversations with farmers who have talked about their reluctance to try new technologies because they've been let down by solutions that were introduced by donor-funded projects that ended up disappearing once the project ended. And I've also, worked with organizations who, really have waited until maybe the final year of the project before they start to think about the viability of solutions that they're supporting, which, generally when that happens is too late. I mean, in the final year, if you're trying to figure out what's the exit strategy, oftentimes that doesn't work. And of course, it's also inconsistent with digital principles, such as build for sustainability. And then finally, I think, when we talk about inclusivity, it's important for us to think about how, if we look at venture capital investment in the ag tech space, a lot of it is geared more towards higher tech solutions, those that are, generally are less likely to be geared towards more marginalized, less tech savvy, more geographically remote and less connected farmers. So, we're going to really dig into some of these things today. And it's important to point out, when I'm saying viability, I'm not saying that means that it has to be a commercial model. There certainly is space for public goods in this discussion as well. I think ultimately what we're just talking about when we say viability is that somehow the bills need to be continually paid, whether that comes from subscribers that are paying, whether that comes from a B2B model, if it's a public good. So these are, just to keep that in mind from a contextual perspective, we're not saying that it has to be a commercial only model. So with that sort of out of the way, I want to kick things off to the panelists. And so, this session is called Breaking Donor Dependency. And so I'm curious what each of you think we need to break. What is the thing that needs to be broken? And how do you think donors can best support viable and inclusive business models? And I'll just pass it around based on the order that I introduced everyone. So Rima, if you'd like to go first, and then Siaka, Abby, and then Tamer. And yeah, I'll turn it over to you.
Sure. Thanks, Josh. So I'll actually answer this question from the perspective of what I have seen as the donors in the donor dependency, or the kind of donors that have come into the enterprises that we have invested in. And here the donors are actually multilateral agencies that have come, and and that has been more towards the fact that in many of these companies, there are large projects that have been kicked off by these multilateral agencies. And in those cases, we have seen it has, I would say, as a fact, the success rates have not been very high when the donors have moved away. And I'll give you some examples of this. So for example, if you're looking to do where World Bank projects have been involved towards, say, digitization of farmers, or which is being more towards a project-led, which is based on which the World Bank or there are other multilateral agencies which are doing certain other projects. And so this is linked to it. So we have seen as a fact, the moment that this ends, actually, there's no continuity of these projects getting renewed by the farmers themselves or groups of farmers. However, where the farmers have been exposed to a commercial advantage or a commercial benefit, when it has been done through a donor led project. So I'll give you an example as a fact. If suppose, for example, there's the produce is getting sold, for example, through a platform, and there is someone who's coming in to initially help these farmers register. And so there's some support that comes in to help them get online. Initially, there would be hesitancy. But the moment the farmers see that there is a commercial benefit that they would derive, we have seen that that has worked. So based on that, when we step back, all our companies look at donors in two broad categories. One, they're just coming in to do for certain other things that the donors are doing, and that's something they see as a temporary revenue. They may or may not take that up. The second is basically where it's seen as almost like what you have as discounts that happen in the e-commerce space, where you were giving discounts to entice the consumers to start tasting the e-commerce deliveries, and after which, once they see the benefit, the consumers have continued to be on this platform. Those kind of projects are something that the e-commerce companies welcome, because they know that these are things that would help retain the customers in the long run. And I think that what is needed, while we have, whether it is donor dependent or donor led support, or it's equity capital coming in, they need to see this not as a donor thing, but as an equivalent of customer acquisition cost, which is what has happened, transformed the entire e-commerce space over the last 1.5 decades. And but somewhere the psychological baggage that we all carry of agriculture and farmers, and that they are poor and that they are not market ready, we cloak ourselves as saying that this is a donor thing, versus the fact that I would restate it as saying it's actually not a donor thing, but it's basically it's a customer acquisition cost, customer education cost, and in order to do that, and if you were to restate that, I think we would have a much quicker adoption of many of these digital technologies. So I would rather look at restating it rather than is how I look at it. And I don't know whether that answers your question, but that's our point of view.
Yeah, thanks for sharing that, Rima. So Siaka, your project, AgriFin, is an example of a project that is donor funded, but is providing support to ecosystem actors. I'm so curious, what's your take on that question?
Thanks, Josh, and thanks, Rima, for those points. I think I'll rephrase some of the points and build on some of the things you said, and maybe contradict one or two things as well. I think primarily being funded by donors. One of the things that we experience and we see where there's possibly a need to actually break donor dependency is actually where donor funds are really focused in sectors or products that already have an established pathway to commercial viability. And we see that oftentimes when donor funding actually supports products that already have this viability, they cause disruptions. Yeah, so potentially you can see that in, for example, in the financial services space, where there are already applicable loans for inputs, etc. We often see that when donor subsidies come to play, or donor funding comes to play, they distort the market such that sometimes you get the farmers not interested in taking up the loan, but instead would prefer to actually get the free or subsidized subsidized service, where there's a clear commercial case that if there was not that availability, then they would actually take the financial services or the fintech services that are being provided. So I think that's one of the key areas where perhaps we need to relook at and make sure that donors are seeing that the market has already been built for a certain product and service, and that they should reduce dependency in that area. However, on the flip side, I think there are agriculture being a very complex ecosystem, there are certain things that are unpredictable and hard for this market to actually actualize and actually totally take advantage of digital innovation. So number one, the farmers are generally vulnerable communities and groups. They either don't have disposable incomes, they lack adequate resilience to be able to actually uptake products and services from ag techs and there's innovators. There needs to be work around marketplace building. And I think donor support is really required to actually build these marketplaces. As Rima mentioned, customer acquisition oftentimes is costly. If you're looking at a platform play, one of the key pillars of platforms is digital assets, whether it's geolocation or geomapping and georeferencing of farms and different inputs. That task of actually doing that work is quite costly and sometimes might not be a commercially viable activity. So with support from donors that actually then lead to digitization of these various assets, it leads to increased uptake of digital solutions. It creates a very versatile ecosystems where different players can then take advantage of these digital assets and then provide services that are commercially viable and that are at scale. I think another area that's very important for donor support is innovation. Oftentimes, especially in the agricultural sector, there's not adequate innovation in digital services, and that innovation requires additional costs that many players that might not be interested in actually taking those costs up, whether it's human-centered design research or more advanced research methods to really understand the system, the players, the archetypes, etc. They would rather spend that money in other sectors where they are more guaranteed to have a good return. And so without donor intervention, without supporting innovations in that space, we will not see the right kind of products and services delivered that will actually improve the livelihoods of smallholder farmers and create an ecosystem where partners and ag techs, etc., can really flourish and scale their solutions. I think I'll stop there and leave a couple of points for Abby and Tama to add on into. So I'll hand it back to you, Josh.
Sounds good. Thanks, Yeka. So I said that we would go to Abby next, but Abby, I want to hold you for last because I'm curious, since Tama is also since Arif is also investing in the ag space, I'm curious for him to sort of round out perspectives on ag, and I'd love you to bring in the perspectives from the humanitarian side. So Tamara, I know, when we've spoken, you've shared about the RF's focus both on, for one, it's a time-bound fund. You are making investments, but you also are pairing that with technical assistance to companies that you're investing in. So I'm curious, as you're thinking about what is the donor dependency, what are the bad things we want to get rid of? What are the things that, can help to enable for funds like yours to do your job more effectively? Curious for your thoughts on that.
Absolutely. And of course, first of all, thanks, Josh, for giving us that opportunity. And I think not much is left to say after what Rima and Sika mentioned, but I'll do my best. As you mentioned, Josh, our fund, we have two pots, the investable capital, and that's the $58 million. We raised that from DFIs, from commercial investors, etc. And that's, like any other fund or any other impact fund, we target to, achieve financial returns and show our, which we actually measure through our impact, which is very measurable in a very measurable way. But at the same time, we have raised right now close to $6 million in the form of a technical assistance facility. So that facility, we received that money from donors to be spent in the form of grants to do very specific things like measuring our impact, allowing our portfolio companies to do farmers training, activities that are essential for the commercial viability and growth of the business, but usually companies at such an early stage, they don't have the cash for, like training farmers, like business development activities, hiring consultants, establishing proper systems like ERP system, capacity building, like sending their middle management for training, etc. And in some cases, even help them establish proper ESG policies, etc. And this is where donor money is invaluable for us because it allows us to support our investee companies in a way that makes our investment even more viable. Okay, but at the same time, and that's the kind of donor money that we love, we support, and we see invaluable. It catalyzes the space and it helps. We have seen also donor money being used for R&D. We have seen donor money used to catalyze a space in markets where it wasn't there, where the cost of establishing the business model or penetration or acquiring farmers, as Sika mentioned, is expensive especially for early stage businesses. Then donors money become extremely valuable. At the same time, we have seen donor money coming in the form of a very short-term project that with no clear, and I'm speaking from a commercial fund point of view, with no clear commercial viability.
I think we just lost you, Tamer.
Yeah.
All right, we'll come back. Hold that thought. We'll come back to you in a moment, Tamer, once your bandwidth stabilizes. Let me pass it, Abby, over to you. So obviously I'm sorry, we're still getting a little bit of a lag delay of some of Tamer's audio, but he'll catch up with us. So obviously, Abby, the exit strategies are going to be different in the humanitarian sector compared to ag. But I know that
over and over again, farmers
from our conversations, I think a lot of these issues are things that you've also had to tackle with, as you're thinking about how do you manage things from the Humanitarian Innovation Fund. So curious, again, what are your thoughts on this topic?
Yeah, thanks, Josh. And I think just to preface my answer and to be clear where I'm coming from, as Josh said, my work is solely in the humanitarian sector, but the types of contexts that we support innovation are typically, I don't want to say stable, but relatively stable long-term crises. So, Northern Uganda, Cox's Bazar, Vanuatu with, cyclical or annual storm seasons and responses there. Those kinds of environments where actually the lines are very blurry and relatively few in really acute crises like in Yemen, and those places that sometimes come to mind more quickly when you think about humanitarian response. And I am a grant funder. I manage grant programs, so I can talk about the experiences of projects that I've supported and seen and the work that we do. I think the key thing that we need to break is we need to enable innovators to break this cycle of for many innovators, almost constantly focusing on finding the next grant opportunity and thinking, what are donors looking for and how can my innovation be adapted to meet the needs of the donors, that specific donor's priority at that specific time, as opposed to spending more energy thinking about how do we make sure and refine the innovation to really meet the needs of people who need that solution or are experiencing that problem. And that's a condition, in my view, as a donor, that's created by donors. Innovators know they're in that cycle. They know they're in the wrong place, but they're just stuck in a loop and they can't get out. It just takes so much time and energy. So I think donors need to find better ways to enable innovation teams to focus on their end user and people who experience the problem. You know, with all the goodwill in the world, most social innovators, and particularly in the humanitarian sector, but I think it's true elsewhere, innovators are serving multiple customers. You know, for humanitarian innovations, you're serving a donor who may often be your first customer, your primary customer, then a user, and your user might be different to a person affected by crises. And they can all be different. They've got different priorities and different spending power, influencing power, all of those kind of things. So as donors, we need to help innovators to prioritize the users and the kind of end beneficiaries, as it were. So less restricted funding, longer funding cycles, giving innovators a longer runway to really test different models. It takes a huge amount of time to test business models, and frankly, we don't know what works. It's not like they're cut and paste solutions, as they're not in the private sector, but it's even more complicated in social sectors. I think we need to be better as donors at recognizing that success is not about the technology alone. It's also about the team, their reach and their networks. And we need to recognize and invest in those things in a way that I think probably VC is much better at doing than donors are doing. We need to recognize the limitations of our own expertise. And for ICT innovations is a very specific point. I think we need to get much better at funding ongoing development and maintenance costs. It should never be easier to secure grant funding to develop a new solution than to continue investment in something that's already been started. And that too often is the case. We need to think about sustainability. What is sustainability? Who gets to decide what sustainability is? I think, you know, innovations don't necessarily need to exist forever. We should help teams to think about their end game and get to that point. As donors, we often don't have ways to fund, you know, informal grassroots organizations or collaborations. And sometimes it's those very kind of organizing structures that make innovations possible and so exciting. But by funding them, we often force a change in that organizational structure, you know, through needing to register and, you know, meet certain thresholds, which then can just stifle innovation and actually cause the thing to fail in the first place. And I think, you know, this is particularly true when we're trying to fund more locally led solutions. And then I think the final thing I would say is we need to get much more comfortable with complex business models. It shouldn't be controversial to say that not all social innovations have a viable revenue model that stands on kind of commercial or earned income alone. Not every valuable idea has a market value, you know, particularly in humanitarian and development sectors. So I can talk later, maybe, if it's of interest, about some of the business models that some of my innovators are experimenting with. They're breaking the cycle, I think, of donor dependency, but they're not cutting out donors. They still need grants, but there are really kind of interesting ways that they can mix their revenue streams to mean that they don't have that same dependency. And I think we need to, you know, as part of that, set our expectations right. You know, if our expectations are too high in terms of the idea of possibly removing grants entirely from the equation, then I think we will leave people behind, and they're often the people who are most in need of social innovation to change lives and improve outcomes. Yeah, I think that's my opening gambit.
Great, thanks for throwing that out, Abby. And Tamara, I wanted to go back to just give you a chance if you wanted to wrap up any of your thoughts that you were making as your bandwidth started to drop out.
Thanks, Josh. I think you guys, I was disconnected when I was talking about how sometimes some of those short-term programs leave farmers frustrated. And we have seen cases where farmers refuse actually to participate in very viable programs just because they got burned in a couple of times before, and I've heard farmers firsthand saying, enough is enough. We've been used and abused just to have, with organizations just wanted to, to have some pictures and that's it. And I think, unfortunately, and I'm not saying that that's the modus operandi, but it happens. And collectively, I think we need to make sure that farmers feel more as an essential part of this ecosystem, that their sustainability is very important for the sustainability of the entire sector.
Great, thanks, Tamer. So I'm going to go off script a little bit here, and I see that Joanne in the chat has posed a question, which I want to bring in first, and then I have some other questions. But so she says that donors seem to be moving away from providing unrestricted flexible funds for R&D and other similar needs towards more blended models. Assuming social enterprises or even NGOs are able to take on debt or equity without that philanthropic capital to get them more ready to report a financial ROI. So she's curious to hear what panelists think of that idea, or that what she's seeing, the trends that she's seeing, and how we can address that challenge and gap. And I think it's, and maybe that's one where, investment funds can step in, where you're providing not necessarily unrestricted funding, but there's more flexibility perhaps to those funds than where a lot of donor funding is moving, in terms of some of the restrictions that have to be put in place. So I'm curious, Rima, do you have any thoughts, or perspectives on that?
I completely agree. In fact, now when we, at least in India, when we evaluate companies, we consider the fact that there is going to be a customer acquisition cost, customer education, and customer onboarding costs. So we factor that in while working out what is the capital required for the company to reach, to get the product market fit and to be able to scale from there. So it's already, and if we feel that this company would not be able to raise the money, then actually it's not considered. But we do, one is the fact the seed fund checks itself have gone up significantly. And that is to consider that, you would need to have this onboarding cost. I can give you examples of, for example, and some of this has also been helped by the government as well in many ways. The payment systems, for example, there's no cost that's associated for some of the transfers and stuff around that. Now, those have been facilitated by the government. But in other cases, you have to step in to be able to provide, let's say, a first loss guarantee. FLDG might be required in order to, let's say, enable a transaction to move digital, because there is now a deficit of trust. And like what everybody has said, farmers have been exposed to lots of frauds in the past, and so they're not willing to come on board. So you would need to give some of these support in the initial phases to get to a phase where you can build that trust. And that's a very critical part, right? And that's included when we look at the project cost itself. And similarly, for example, insurance, agri-insurance is another space that we have looked at, right? And where the government has tried, and a lot of other donor agencies have tried to introduce agri-insurance, they've all failed. It's just been, at least in India, I can only speak for India because that's all that I'm aware of. The insurance penetration of insurance is very low, and the trust factor, the farmers are not willing to come on board to pay that insurance. So if you could look at ways in which the product itself is defined in such a way that you could introduce it with other products, you layer that, and finally the farmer sees the benefit of it, I think that's when it would be broken. So we see the need for a large part, in some ways that it's a cost of that customer to get the trust of that customer, right? And today we are, because of the fact that there's not much of donor support that we are seeing in many of these commercially revenue-based models, that the equity capital is being built into to meet that need as we in India. And those, I think, have been moving the needle. Yes, I agree that it still hasn't gone down to the lowest, smallest farmer base as yet, but it's moving up from the richer farmers to actually a significant amount of the consolidation is being seen. Even the 5-acre farmers you're seeing are now participating in these transactions. Yes, the landless and the 2-acre farms are still not there, but at least the 5 to 10-acre farms we see are participating. And equity capital is meeting the need in India. And the government has stepped in for some of those, especially around the payment parts and all. They have subsidized that, is where we're seeing it.
Great, thanks, Rima. Anyone else have any perspective or response in either to what Rima said, but also to the question from Joanne?
Josh, maybe I'll just jump in very briefly. And I think in terms of restrictions and depending on what those restrictions are, for example, if the restriction is really to focus on a particular topical issue, gender inclusion, climate change, adaptation, etc., then I think those restrictions are warranted, and they really then focus the facilitation and innovation around a specific topical issue that then allows the players to address that issue and actually create the right kind of impact around that particular thing. The challenge is that sometimes or a lot of times those restrictions then deprive the innovators and the market facilitators of the opportunity to actually find new ways of solving certain issues, whether it's restrictions around, or it's creating new credit facilities, where it's exploring new digital innovations, etc. And so those have to be taken in close consideration. And just to add one more thing here is that I do believe that there needs to be a lot more inputs that the donors take from market facilitators such as AgriFin, RF, etc., when they're coming up with this grant facilities, so that they can truly get what's happening on the ground, what are the experiences where we are facing with different innovators, and what are the true opportunities that their grant mechanisms can support deployment of services, and at the same time, of course, ensure that there is lower dependency from the grant funding in years to come. Thanks.
Great, thanks.
Can I ask a question to Saika?
Yeah, go for it.
So, Saika, have you seen this in market-led innovations as well?
Well, yes. When you say market-led innovations, and I think that's what we primarily focus on, is innovation around key issues in the ag ecosystem, whether it's expanding market access, whether it's expanding digital financial services, whether it's expanding information services. We do get to see certain restrictions, or well, I wouldn't call them restrictions, but say, for example, certain prerogatives. For example, you need to achieve, say, a 40% or 80% gender outreach. So that means that if you're going to give grants and TA support to a specific innovator, they have to actually achieve these numbers. So this drives the innovator to then sometimes potentially look outside of their current model, and it's good, and it's got its good sides in terms of they then have to think a bit broader. What's the impact? What's the potential impact we can have? Do we have an impact on climate adaptation, etc.? Yeah, so we do see this happening across market systems as well.
And are they willing to modify, even if their business model was different, are they willing to modify that to accommodate the donor? This particular is treated as a project because it may not continue in the long run.
Very good question. Very good point. I'll answer it in two ways. I think the the process of getting them to really understand the value of focusing on certain points, like, for example, why would a gender strategy be important for a particular organization, especially if you have a digital-led solution. Apart from, of course, the social perspective around gender, ensuring that there's gender empowerment. There's also the opportunities around the fact that your product is potentially not reaching an addressable market because it's not designed to reach that market, whether it be that, say, for example, female smallholder farmers have less mobility, certain issues they face in going to market, etc. And because you haven't taken those points into consideration, you've been focusing on a particular product pathway. By actually having this restriction and this focus, you can start to build a more holistic solution. And at the end of the day, get to a commercial viable point. And we've seen this actually happening in the insurance sector. Actually, we had a call a few days ago, and they actually are seeing that female smallholder farmers, once they actually reduce the price point of the premium and were able to give certain facilities to allow premium to be paid in installments, they were getting a larger number of women actually taking up the insurance product. So I think some of these restrictions actually do have a lot of benefits to these innovators, and that allow them to think across different social issues that if they were not in place, those issues would have been left unattended to, and those communities will continue to be vulnerable. I don't know if Abby has a comment, because this sounds like something that she would also easily relate to.
Yeah, sorry, I actually took Josh away from what he
no,
had.
no.
I'm so sorry to interrupt. I hope sorry.
This is exactly how we want this session to go. It's not just me interviewing you all, but this is a discussion. So so no worries, Rima. Please, let's continue that. Let's challenge each other. Let's bring up ideas. Abby, I want to go to you since Yeka's called you out, and I see that you're ready.
I'm ready. Yeah, I think the question is exactly on point. I think I'm extremely concerned about just the constantly small shrinking pool of unrestricted funding that's available. I think Europe is, I don't know whether to say ahead or behind of say the US on this curve. The Europe has had a lack of unrestricted funding for a long time, even from foundations. I would say even less than the US, as a context that I know a little bit better than elsewhere in the world. But what we also know is, from my experience, the most effective innovations, the most successful innovations, most sustainable innovations are those that have had significant and ongoing unrestricted income, because they can invest in the technology, they can invest in making sure that they're constantly updating and adapting to the needs of their users, as opposed to thinking, oh, what's our donor requirement here? And the language we use is we talk about focusing on the core of the innovation, like what is it that is intrinsic to the innovation, as opposed to having to adapt for every deployment, which is often, or every use case of the innovation, which is often demanded by kind of specific grant funding. So I think to kind of draw a really quite extreme, but probably not unusual example of this kind of restrictive funding, I recently was working with a team who had secured funding from a donor, which I will not name, but they had a 1% budget variance, or maybe it was 2% budget variance by month. So they had to keep that budget spend on track against the cash flow forecast by month. And the money was being dispersed by a European donor to a European lead partner, and then the project was being implemented primarily by a partner in Nepal. I mean, you could have a 2% exchange rate variance, never mind whether your invoice comes in the right week, or whether you quite correctly estimated travel costs and all of these things, which, I mean, it's ridiculous. When you actually think about that in reality, and just thinking about even the idea of operating in that kind of bureaucratic environment where you just can't deviate 1 cent from the plan almost. how can you be innovative? How can you really focus on actually what are we trying to do in the long run when you're just that tied up in the day to day? And I think, we talk in the circles that I'm in, the donor circles, we talk a lot about we need to do flexible funding. For some reason, we've stopped talking, I think, about unrestricted funding. So even that conversation shifting, we don't talk about unrestricted, we say flexible. And I'm worried that there's like an incremental closing of the space. So I think we need to keep pushing back on that. I certainly do, but I also think that the innovators need to and recipients need to. And I think it's easy to underestimate the power that grant recipients have. Often donors will say, our grant agreement is final, it's not negotiable. Sometimes they are. And it takes teams to ask and say, this is why this is a completely unrealistic and unreasonable ask. And this is why this is a problem. And sometimes there is room for negotiation. Sometimes that negotiation has to go way back to a back donor of a back donor, but sometimes change happens. And when you think about that 2% variance, any of you who've been doing project delivery knows that basically just opens the door for fraud. It's actually a hugely risky thing to impose, because I don't think it's possible to do what they're asking. Anyway, so a lot of thoughts, but I think that concern is really, really valid, and I think everyone should be pushing back hard on any donors that are being super restrictive, because I think it's scary. It closes the space for innovation, but it also really limits the ultimate impact that innovations can have, because that end game just gets lost in those kinds of projects.
Yeah, thanks for that, Abby. That is that's certainly a very bad case practice, I would say, the one that you cited with such heavily restrictive funding requirements. So I want to touch back actually on the question that Rima asked, and I'm going to pose it first to Tamer and then open it. But I think, that question about donor priorities, like how do you make sure that that is something that is aligned with where they want to go, where the enterprise wants to go already, and something that they're just doing because it is a way to get cash, but it's not something that they're really interested in. And that's sort of a fine line. And I think that really gets down to me to a question of, due diligence, and how do you do due diligence effectively so you're making sure that there's real alignment with any company or firm that, whether either you're investing in or you're seeking to partner with, because I know that if we look at the donor funded world, that process, for one, there's not always the right expertise internally to be able to even do that due diligence, but also just the requirements of, oftentimes, it has to go through an RFA or an RFP. You read you get written proposals about something, and then you judge based on that. It's not always the most conducive for real deep due diligence. I'm sure that Tamer, that Rima, before you're selecting companies to invest in, you're expecting to have more than just a 5, 10, 20 page proposal that you read and judge just based on that. You're looking at other things, you're having probably conversations with them, you want to get a feel. So I'm curious, I'll send it to you first, Tamer, and then open it up. How do you do that due diligence effectively to make sure that is that good alignment, that deep alignment?
Oh, sure. I think what we do is like what all funds do. We dig deep into a couple of things first. The business model, the viability of the business model, whether this business model is scalable, and if it is scalable, would it lead to a company that's exitable? Because our capital is returnable capital. So we want to, we don't want to be, to be stuck in a business that is growing, but no one is interested in buying it, or there is no way for us to exit. That's very important. Otherwise, we're stuck in what we call the lifestyle kind of business, which is everybody is happy except the investors. We also dig very deep when it comes to the entrepreneurs. Are they committed for the long term of this? Because finding a business, at least in what we do in the ag space in Africa, that will, become a unicorn in 3 or 4 years, that we don't come across those every day or at all. So it takes time. That's a sector that takes time to build robust businesses. So, we want to see that the entrepreneurs are committed, and also want to see that the entrepreneurs have the ability to build good teams as well. It's we don't end up in a one-person show where just that person believes that he or she can do everything, and then we end up in a messy situation. But at the same time, what we have seen in some organizations, that where they don't have the expertise, and when we don't have the expertise, we tap into consultants, etc. So we also don't assume that we know everything. And in many cases, we have seen donors doing like a demo day, or having like a screening panel where they bring people with different expertise and have them ask those kind of questions that where they don't have the expertise. Things like, okay, what would you like to see in this company if to become investable? Things like, okay, how to make it investor ready. So it's like kind of a gate review kind of process, where, like in our case as a fund, of course we have our IC, and in our case we have an independent IC, but we have seen donors and NGOs, counting on mentors and volunteers with that kind of different skill sets to actually complement what they have in house. Because I don't think there is an organization where it has, all sorts of expertise in house. So it's very fine to tap into others.
Yeah, thanks, Tamer. And Sika, I'm curious, how do you, within Agrifin, you're working with dozens of actors from all sides, from the government, public sector within countries, from entrepreneurs, startups, some capital investors. What's your process for identifying good sort of partnerable companies, and what does that look like? How are you ensuring that there's that alignment with the priorities that you have, that your donors are asking you to prioritize? Doesn't look like you're on mute, but I can't hear you, Sika. I don't know if you muted on the headset by accident.
Is it good now?
Yeah, now it is.
Great. Apologies for that. I don't know if I would say that that's the Agrifin IP and our unique way of working. But yeah, I mean, I'd agree with a lot of the points that Tamer made. I think apart from that, there are some nuances that you've got to look at when you are trying to identify who are potential partners that can have scalable impact and, of course, be sustainable in what they do. And oftentimes that takes a number of skill sets. One of the strengths that Agrifin has is that our team comprises of practitioners that have worked in the private sector in those particular areas that we're looking towards recruiting our partners in. So, for example, in the telecom sector, in data, etc. And so they have that innate or that ability to actually pick out who could be potential winners from their experience, etc. And this coupled with a lot of the research we do in terms of finding out insights on what's making markets work. When you find an innovator that is already ticking the box across, say, they understand how channel strategies lead to certain acquisitions. If you have more female channel members, say, for example, you can onboard more women, et cetera, et cetera. So people who understand some of those trends, then you're able to pick out this same characteristics in the partners that we're looking to invest in. But by and large, I think the biggest thing, as Tamer mentioned, is really the conversations that we have with the innovator, this deep conversations, and really finding out how open they are to considering new ideas and new directions to actually build their solution to the next level. Sometimes you find that some of the innovators, not all the cases, of course, there are always exceptions, but if they're hard fast on a particular pathway, then it's a lot tougher to actually get them to scale or work within a certain environment. And oftentimes they tend to be the organizations that don't make it over the bridge. They don't get to that level of innovation, that level of scale that would interest Tama and Rema in terms of investment opportunities. So those are some of the soft points. I think the soft points are very important, especially because this ag tech ecosystem is really an emerging market. I don't think there's any one business that's really cracked it. Most of the organizations that have had a good runway have iterated their model a number of times. You look at Twigger Foods, that was looking at one value chain, was working with smaller farmers, medium scale farmers, etc. There's a lot of iteration that has to happen. There's a lot of innovation and then switching from your original idea to something else. So that's an important aspect. How willing is the organization to consider other directions, other pivot points that would then allow them to truly then deliver value to their customers writ large.
Great, thanks again. I want to pivot a bit. I'm going to start with you, Rima. I know you mentioned the some of the maybe the farmers that you tend to, or the companies that you're investing in, maybe they're targeting farmers of a certain land holding, or that have certain certain wealth or certain level of wealth, not sort of the poorest of the poor, right? And as we think about inclusive business models, I want to pose that from two perspectives for us to think about. So one, like how are all of you encouraging or seeking to partner to ensure that business models are more inclusive, but also how are you thinking about how inclusive the actual teams are? So the founders, the boardrooms, we started a poll here that was asking about some research that we recently saw from Brighter Bridges, their database of African ag techs. And the answer, for those of you who are curious, very good job, participants. The majority, or not the majority, but the largest number, the plurality, 37% of people selected 75%. So 75% of the firms in their database, African ag tech firms, are all male teams. And so my question is twofold. Pick both or whichever part you're interested in. Starting with you, Rima, at being inclusive down at the user level and also inclusive in the leadership and boardroom level. What are the types of things that you look at? How do you seek to complement some of the gaps that you can't fill based on your model?
So I will, for the first part of it, in terms of how we're building that inclusiveness across the strata of the farmer and the agri-tech supply chain, agri-tech stakeholders. I'll actually take from what Sika and Tana had mentioned in terms of how we're looking to do some of those. So what we see working is where you can actually have pilots to do a product market fit. Like what Sika mentioned, there's a lot of iterations that would have to be done if you have to reach a particular cohort of farmers who currently don't see the value or currently who have not been brought into it. Now for the business, so you've got to look at the business as such. They have one, there is a primary metric they're looking at, is the fact that how do I grow in the core business that I have, on which I am raising funds. I have my next round of funding that needs to come in, and I have to show growth in this one. So there's a bandwidth constraint, there's a resource constraint with which innovators are working with. What we have seen is the fact, and this is something that we're trying out, and we have actually tried, this has worked very well in some of the deep science-led businesses. In fact, even in healthcare, we have seen this, that where in digital healthcare solutions and all, where you have pilots being done. So you have grants that are coming, donor money coming in with a specific agenda to say that you need to create a product for meeting an X inclusive model to get a certain segment of stakeholders into design a product for them. So you may have to do iterations for it, right? And so that's separate from the core business that's happening. And once that works, the business sees the potential, because there's a long-term potential in all these. It's not that there is no the entrepreneurs recognize that this has long-term potential, but it's just that from a short term, they are constrained by their own bandwidth and resource constraints. And so they're not able to take that out. So if that pilots can be separated out from the main business, we have seen that succeeding. And that is something that we are encouraging, and we are looking to see how that could be put to use in many of the enterprises to say that you continue to do this. And this has been in one of our recent cases as well. We have a aqua supply chain company, and we are evaluating, could we do some pilots in some specific areas which are currently not part of the business, but we see a long-term inclusive potential in that one. Right? So that's one thing that we are pursuing. And I think I agree with Sekha that it's not just that, you say, okay, I'm giving you $10,000 of X amount, just go and do a product for that, because there's so much of iterations involved in order to make that into get the product market fit and make that as a scalable, which can be adopted by the main business line as a scalable business, right? And so that's why. And this is how a lot of other innovations also take place in a business as well. I mean, you have your growth engine going, you're doing other products, you separate that out and don't put it in, because then there'll be so that's one way we are seeing as how we could address these business opportunities for creating inclusive products. So that's one thing. On the gender and other inclusivity, I would say that there is, it's still a struggle, and it happens on two fronts. One is that there is an overall bias that we have to break that bias. And there is we also have to we have to invest into capacity building to get the pool of resources that has to be available. So there's both of these that have to happen simultaneously. So we do keep looking at it, but I wouldn't say that we have done full justice to it, because it's got multiple layers to it, and it's not about just saying, let me do one project and get it done with. I mean, it's multiple things that come together.
Okay, yeah.
And that's still a struggle.
Yeah, thanks, Rima. So I'm curious, Abby, obviously in the humanitarian sector, you tend to be working with more marginalized population segments, but I know just from many years working in this space that oftentimes we may sometimes, to meet our targets as an implementer, we may find it a little bit easier to target the easier to reach, so the least marginalized of the marginalized. And I'm curious, how do you incentivize that? What are the sorts of things that you're doing to ensure that there's real deep inclusivity in some of the things that you're supporting, and it's not just that top layer of less margin, whatever, anyway, what I'm saying, the least.
Yeah. Yes. And this question is making me wonder whether there is a parallel. So let me try this out. One of the big assumptions that I think was made when there started to be a lot of investment in innovation for humanitarian action over the last 10 years, there was kind of an assumption that innovation was about doing more with less. It was either about saving money or being able to reach more people in need of humanitarian assistance with less money. And I wonder if there's a parallel with there's almost a bit of an assumption that you know, innovation in the ag sector is about, you know, making money. For a lot of people, it's about, you know, generating revenues, supporting livelihoods, all of these things. But what we've actually seen, and this is going to come out in a big report in the next few months, what we've actually seen is that the vast majority of humanitarian innovations exist to improve the quality of humanitarian assistance or the inclusiveness of humanitarian assistance. So people develop innovations because they want humanitarian aid to be more inclusive. And I wonder if there's actually a parallel that, you know, some innovations in the ag sector are about, you know, livelihoods in the mainstream, and, you know, kind of business opportunities for people and communities. But in some cases, it will be about how do we increase access? How do we increase reach? How do we get to the most marginalized people? So in that sense, our work isn't about how do we incentivize people to do that. It's about how do we enable people to do that? How do we make sure that the environment that we as donors and other supporting actors create actually supports that kind of infrastructure in those communities and for people to achieve the outcomes they want to achieve. And I think this is kind of one of the themes I was touching on in my opening reflections, which is, you know, who decides on what success is. And I think, you know, sometimes as donors, we kind of think it's about longevity of the project, and that means numbers, and that means targets, and that means revenue, and that means reach. But sometimes it's about depth, and it's about reaching people that are hard to reach in new ways that aren't possible through the systems that are the mainstream. So I think in many ways it's the reverse of that. It's how do we support, you know, complex business models that you know, and provide and support public goods where they're needed for that, and infrastructures and open knowledge and open data, and really enabling that sharing across projects, across communities, that kind of reduce the cost and increase the speed at which innovators are able to do what they do best, but in a way that's really viable and in that sense sustainable. I think, does that in any way answer your question?
Yeah, it does, and actually it gives me another question that I want to pose now to Tamer and Sieka, which is sort of pulling off of that. You know, you had mentioned that you're seeing in the humanitarian space, at least, that there are a number of what I would call sort of inclusion forward or inclusion leading innovations, where that's sort of a priority of theirs. And I'm curious, you know, Tamer and Sieka, you both work across multiple markets, multiple countries. You know, are you seeing that yet in the ag tech space, where the inclusion is one of the driving factors of the business in terms of ensuring that smallholder farmers, more marginalized farmers, less connected farmers have access to markets, to finance, to services, or are you still seeing predominantly more sort of, you know, looking at the most easily commercially addressable market segments? And if the latter, are you doing anything to try to encourage more of a inclusion focus? So whoever can unmute themselves first, feel free to field that. All right, Tamer, you win.
Okay. So I think it's the former. If we look at our portfolio companies, and even, you know, a lot of our pipeline companies, definitely they address the needs of smaller farmers. As a matter of fact, addressing the needs of or helping smaller farmers adapt to climate change is basically the investment thesis of our fund. So we have declined so many, you know, very promising investment opportunities because they weren't working with smaller farmers. There was no direct impact on smaller farmers, and definitely we see and some of I can at least think of, you know, at least our portfolio companies where we believe that they are They have a great potential to become very successful businesses. They are scaling, they are growing year on year. They're bringing a lot of value to smaller farmers. As a matter of fact, we use lean data by 60 decibels annually to measure the impact on our smaller farmers, or not ours, the small farmers working with our portfolio companies, and actually monitor that year on year. Is working with our portfolio companies improving their livelihoods, and in what way? Is it helping them, become more resilient to climate change, and in what way? And we cannot claim that 100% of our farmers are below the poverty line, but let's be candid, right? Poverty line is a number. It's of course, below the poverty line is like very poor, but that doesn't mean that a farmer who is making $5 a day is riding in a Bugatti. No, they're still fairly poor, like very poor. Just to call a cat a cat. And I would say that more than 90% of the farmers working with our portfolio companies are within that, let's call them needy farmers, if not actually even more than 95%. And about 35% are below the poverty line. But it tells you that there is this big, massive segment of farmers that, yes, they are above the poverty line, but they are still like fairly poor, that they are benefiting from innovation. And one thing, actually, if I may comment also on the gender issues, that one thing that we learned from surveying those farmers is that surveying the farmer that is registered as the owner of your product or service is one thing, but actually digging deeper to who actually use it. And in some cases, we realize that it's actually the husband that's the one that is registered as the user of the product, like in case of irrigation, for instance. But when you dig deeper and you go and you start doing actual interviews and you ask, as a matter of fact, the wife is the one that actually benefits even more, because yes, both of them use it, and yes, both of them benefit from the commercial or financial return aspect of it. But there is an aspect that no one is talking about, which is the quality of life of the female farmer, not having to go and carry those buckets of water, for instance, in the case of an irrigation system. She doesn't have back, they all said, oh, we don't have, our back doesn't hurt anymore. No one should have back pain because they have to carry a bucket of water in 2022. So that's an extra aspect of things that we are try to capture. And it's an indirect effect of innovation, but definitely the impact on those, needy farmers is there. It's evident, it's quantitative, no doubt about it.
Great, thanks.
Yeah, maybe just can you hear me?
Yeah.
Just to add very quickly, one point is I think innovation in itself drives inclusion. So if we look at, for example, mobile financial services, by the very aspect that it was developed on the railroads of telco companies, financial inclusion has skyrocketed in a number of African countries just because the innovation was made available. And so I truly believe that if investments are made in the right type of innovations, this inclusion will continue to go deeper and deeper to those vulnerable populations that have so far not been able to access these services. So a key point to increase inclusion is really to continue to build innovation and to make it accessible to as many populations as possible. And I think from the work that we do as AgriFin is always looking out for, is this innovation, how does this innovation scale? And how do we get it to be affordable and being accessible and usable to multiple populations? So that's a critical point to be looked at. Thanks.
Yeah, thanks, Eka. And I want to, Abby put something in the chat, which I want to just read out for those who are tuning in through YouTube or Huva. She wrote this before you just mentioned scale. Siaka. So it's not a response to what you said, but I think it's an important point that also is worth raising. But I don't want to go deeper into it because we could have a whole other session just on scale and how we're defining and thinking about scale. But Abby wrote, one other factor that influences the extent to which inclusion can be supported is donor expectation of scale. If we expect innovations to be globally applicable, it's unlikely they will be designed in a way that meets requirements of those who are hardest to reach. So just wanted to read that, put it out there on the record. I think it's a good point. I want to pivot. We have some questions in the Q&A. I want to pivot to one of them, which is from Danilo. And I'm going to change it a little bit because Danilo asked the question in the context of Africa, but I'm going to pose it more broadly. So what incentives can be put in place to induce governments to reduce regulatory limitations to foreign direct investment, thus reducing the risk for FDI? Curious if anyone has any thoughts or perspectives on that. And I would actually also add, feel free to talk on things beyond just FDI. I mean, are there other regulatory barriers that you see that are hamstringing the ability for startups to really be viable and innovative? I mean, and inclusive. I know some years back, I was speaking with some ag techs in Myanmar, and they were saying how within Myanmar, there's no sort of, the way that the laws are written and defining what a business is, they don't allow you to not make a profit. They sort of assume that if you're a business, you have to make a profit. And so if you're not immediately making a profit as doesn't have to be ag tech, as a digital tech startup. And we know that that's often the case, that there's, you may have several years where you're not making profit. You still have to pay tax on what the government is saying should have been your income or something along those lines. So feel free to touch on other regulatory limitations as well, but curious if anyone has any thoughts in terms of policy regulatory side, what you think can be done in the markets where you work.
India does have an issue as far as donor support goes, because there are a lot of regulations of who can receive the money and how it needs to be deployed. So it's not easy to do many of these donor dependent projects. If you are especially it's completely out if you are a company raising venture capital. So, you've got to find out ways and means to structure to do any of these pilots. It's not an easy one at all. It's very, very difficult.
Yeah. Thanks. For anyone else who, Siaka, looked like you had something.
Yeah.
Oh, we lost your audio again.
Hello?
Yeah, now you're back.
Sorry. Great. I think I just wanted to touch on one, and I think it's a bit controversial. And it's about data and data sharing and data privacy. I think there are various ways of looking at it, but in the agricultural sector, where it's a lot of ag techs are struggling to actually make it to scale their businesses, data is an important currency. And some of the restrictions around data sharing, for example, if you collect data on a farmer, your ability to share it, say, with a financial institution to extend a new product or services will require consent from the farmer to share that data, etc. For some of these organizations that have been doing this work over a couple of years, going back to that farmer to get the consent to expand their product portfolio, diversify their product offerings is a challenge. And I think there needs to be some conversation around how we're thinking about data privacy, data laws, and how we can actually make this more applicable to the context within which we're working. So I think that's one thing that I just really wanted to highlight. And it's important that we look at it and we really rethink some of the parameters around it.
Yeah, that's a good point. And that would have been, I don't know if you had a chance a few hours earlier today, Siaka, there was a session on data sovereignty, which this would have been a great question to pose there as well. But I think, it's good I would encourage participants, in the conference to share your thoughts. Like, how are you thinking about these? Obviously that's one of the themes of the conference is data and digital sovereignty, what does that mean in the context of our work more broadly? What does it mean in the context of seeking to deliver the most impact for the most people? So just some food for thought to put out to participants to think about and share your perspectives. So I know we only have about a little more than 10 minutes left. So I want to pivot to one last question, then we'll see if we have time for something else to give everyone an opportunity on. And really, this is, if you take your opening question or your opening response, and then some of the stuff that we've been discussing since then, if you have one or two big pieces of advice to those who are working in the donor and donor funded community, and or to startups, to ag techs who maybe have received donor funding, that might want to have been seeking donor funding, what would you advise to either or both sides of those to do things better, to do things so that we are not on continuing this path that, and certainly not everyone's on that path that we've discussed along the way in terms of having, bringing out about issues of trust, of about initiatives or ventures failing because they become overly dependent on donor funding, and all these issues. What advice would you give is my short way of saying that long bumbling question. And Rima, I'll start with you.
So I would pitch for the fact that they look at very clearly specified products that can be developed, which can then be absorbed by the company or by a business to be able to deliver it. So I think donor money going towards developing products which would meet the inclusive mandate, but where there is a business potential as well. So it's an independent product where that if whether you need you can define the customer acquisition model or the trust or the pricing mechanism or the technology that's required to penetrate. So it could be various things, but define this product to say that, okay, I need to ensure that a 1 acre farm also has to be part of this. I can see there are 50 million farmers who have 1 acre, and if they were to come in with $2, I can still make a huge amount of money. And what do I have to do that and be able to help that define that product? So it's not about giving the money to the company to go and do a free project with those 50 million, because that doesn't survive in the long run. But if they can help build innovations, I think that works very well. So I would put my money into developing innovative products, which is independent of the companies to be able to do that. That's where I would bet on donor money coming in.
Great, thanks, Rima. Abby, how about you? What's your advice?
I think my advice to both groups would be similar. I think it would be it's a bit cliche, but try and spend some time in the shoes of the other side. I think, maybe I'm wrong, it feels like donors are becoming just more and more separated from the realities of the people that they're working with, the implementing partners, the innovators, whoever they are. And I think, the way that I work very much is based on the experience I have working very closely with innovation teams and the things that I see them struggle through. And the only way I can do that is I have a really close relationship with the teams that I support, and I really try and see everything we do from their perspective and judge things accordingly. What we can impose, what we shouldn't, what we should be pushing for even when there's pushback, and what we shouldn't. And I think the same goes for kind of innovators and ag tech teams and firms, is to really, when you're working through some of these challenges, think about where the donor's coming from. You know, a lot of donors are solid bureaucracies with no real face behind them, but a lot of them do have faces behind them. And a lot of things that are imposed, or some things that are imposed, are just decisions that are taken by individual people, and they've just misjudged something. You know, I sometimes think, how did that 2% thing come in? Was that just someone said, let's have a 2% variance limitation, and no one said no? You know, sometimes bad decisions are made from simple human error or just a gap in knowledge. And I think it's worthwhile sometimes for teams to just really recognize that with donors, and sometimes you can have those conversations, and really important changes can happen as a result, and it changes that dependency, it changes that dynamic, and it improves outcomes for everyone. So I think that would be my very cliche but kind of very, very genuine advice for both sides.
Great, thanks, Abby. So Tamara, I want to go to you next. Before I do, though, I want to call attention to participants in Whova. If you can please go to polls. There's a poll there asking for feedback on this session. We've been told that none of the presenters will be invited back if we don't get at least 20 people responding to that poll. So please do. We would hate to not be invited back to subsequent ICTforAgs. So Tamer, to you, and then Siaka to take us home with your advice.
I wouldn't call it an advice. I think it's just two comments. The first one, unlike what a lot of people are saying when they say that we need less donors' money, I think the sector and the region needs way more donors' money. Like we're talking about, at least 10 times donors' money. However, I think that donors' money, if, as actually Rima, very nicely put it, if we quadruple or increase it by 10 times, but focus that donor money on solving specific problems, I think the impact would be orders of magnitude higher. Thank you.
Great, thanks, Tamer. And Siaka?
Well, it's not good to go last. So everything has been said, but maybe I'll just say one thing, and it's based on a conversation I had with an ag tech, we'll call it an ag business that's becoming an ag tech. And I think over a number of years, they were known to be very donor dependent, and everyone said that their model is not sustainable, does not scale. Yet they were reaching about 1 million farmers in every country they went to. But what they did over those years is really understand what it takes to get an almost subsistent farmer into the ecosystem of getting market access, getting the right inputs, the right training. So they identified the right combination of services to move a farmer from one level of income to the next. And through those years of understanding and donor funding, with the onset of technology and innovation, they have now been able to actually incorporate a lot of innovation into their services, and they're able to scale to an extent that their donor dependency has gone to less than 30% of their budget. They are now 70% financially viable. So in a nutshell, I think we don't have all the answers. I don't think we've cracked the full agricultural system, the full system of innovation that's out there. I mean, the platform models that have created Uber and all these large organizations is a very recent occurrence. And I think there are models around the agricultural system that still need to be found. And we need innovators that can work in the space that maybe do not have access to the investment that Tamar and Rima have, but the patient capital that supports their initiative can really come up with some breakthrough ways of working and actually changing the outcomes for various participants in the ecosystem.
Great, thanks, Siaka.
Which company did you mention, Siaka? I didn't catch that.
I didn't want to mention it.
Oh, okay, sorry. I thought.
I'm curious if what I'm thinking in my mind is the one, but I won't. So I'll ask you on the side. But great. Well, I want to. We're about out of time, so I want to take an opportunity to thank all of you for both for your thoughts here, Rima, Abby, Siaka, and Tamara, and also to our audience and participants. We did thankfully passed the threshold on the poll, so we are not going to be banned from ICTforAg. Although if you haven't completed it yet, don't let that stop you. It's always good to go beyond the bare minimum. Right now, we're just at the bare minimum of that threshold. And I know we didn't get to everyone's questions. I would encourage Rima, Abby, Tamaraseka, if you have time, in Whova, you can see some of the questions that people left. Please visit after the fact, and if you have any perspectives or thoughts to offer. And to everyone who's been participating, please keep the conversation going in the chat, in the community. If there are things that this has sparked, ideas that it sparked in your mind, we'd love to have that conversation going so that we can continue. As Sieka said, we're still early days. There's a lot that we don't know yet, that we haven't figured out. And so I think it's going to take a lot of iteration and bravery and challenging norms and status quo for us to get there. So with that, let me bid everyone adieu. I know that there's a social session coming up next in a minute. So I would invite everyone who's in Whova to go and check that out. And yes, enjoy the rest of the day. And thank you again, everyone.
Thanks for having me. Thank you. Pleasure.
Thanks, everyone.
Thanks for having us. Thanks.
Thanks, everyone. Bye.